Last week I took this Euro USD sell and I managed to catch a clean move to the downside. In this video, I'm going to be breaking down why I took this trade, where I entered, where I placed my stop loss, and where I placed my take profit. And I'm also going to break down mistakes that most traders would have made in this situation. Let's get started with the video. All right, so before I enter any trade, the first thing that I'd like to do is take a look at the higher time frames, because the higher time frames show you the actual moves of the market and they have less noise. So when it comes to Euro USD, the first thing I did was go to the daily time frame. And as you can see on the daily time frame, Euro USD was selling off because we had this low and then we had this high. Then the market ended up breaking structure to the downside, creating a lower low. Then it created a lower high, right? So when it broke structure again to the downside, that gave me more confirmation that I should be looking for sells. So to refine my entry and to refine my key levels, after making sure that the market is in a downtrend on the daily time frame, I come down to the 4-hour time frame. This black line is my key level because on the daily time frame, this was the break of structure and the indication to the downside. When you come down to the 4-hour time frame, as you can see, the market was in a no trade zone around here. This is a no trade zone because this is consolidation and we do not trade consolidation, right? So we mark out the no trade zone and we wait for a break to the upside or the downside. And in this case, the market ended up indicating to the downside right here. And if you're new here or if you know me, you know that I trade ICC, which is indication, correction, continuation. That is a 3-step formula. So we already have a break of structure and an indication to the downside. This shows us that we should be looking for sales. The last low that we had on Euro USD was up here. The market was in a no trade zone. It came up here, it created a high, came down here, it created a low, but then once it came back up, it created a lower high. This is a lower high because it's lower than the previous high, right? So when it created a lower high, and then it ended up breaking structure to the downside, that was more confirmation that we should be looking for sales. And the only way this sell setup would have been invalid is if the market came back up, corrected, but ended up breaking this zone that I marked out right here. If the market ended up breaking here, that would have meant that the sell trade was invalid. So we had an indication to the downside, right? We had our indication right here. That is step 1. Step 2 is for you to wait for the correction. The correction is always going to be bullish. People made mistakes here and thought that the trend had changed because the market was buying up. But I need you to remember, on the daily time frame, we are bearish, right? And if the market has not broken above this recent lower high that it created, there is no reason for you to be thinking that it's bullish. It can do anything that it wants to do around here. But as long as it doesn't come up, right? As long as it doesn't come up and break above here, there is no reason for you to be thinking that the market is bullish. All right, so since step 1 was done, the indication phase, we had to wait for the correction, right? And when it corrected, it ended up creating a lower low. This is a lower low because it's lower than the previous low. And remember what I said, as long as the market did not break above this previous low, there is no reason for us to be looking for buys, right? So we have an indication to the downside. Step 1, complete. We had a correction to the upside. Step 2, complete. The correction ended up making a lower high, right? That is extra confirmation for us to know that we are in the right direction. Then anything back below this black line would have been a sell from here all the way to down here, right? So my trade setup looked a bit like this. This was my indication. This was my correction. And my entry was around here. My stop loss was right here because, as you can see, price came up on the correction, got to this point, created a lower high, right? Decided to sell off, but then created a higher low. This is what faked most people out. Most people thought that since it had created a higher low, it is going to sell off. But this is the new recent low that we have. So if price has not broken this low, there is no reason for us to be looking for buys. And as you can see, buyers tried to push price back up, but failed, which then created equal highs. Those equal highs showed me that price does not want to buy above this point, right? This is a strong level of sellers and price does not want to go above this level, right? So that is why I placed my stop loss around here. As soon as price came back below this black line, that was my key to enter. And my target was down here, which ended up giving me a clean 1:2. And this is how it looked on my MT5. As you can see, this was the before and this was the after, right? So we had our indication, we had our correction, and this is our continuation. Most people on Instagram were asking me why I did not enter when price came back below this point, right around here, right? Right around here. Most people on Instagram were asking me why I did not enter at this point. So first things first, as you can see, when price came back below this black line, this was around 4 a.m. Reason number 2, I just did not enter. That was still a very valid entry point. So let's say we took this sell when price came back below our point of interest, right? The trade setup would have looked something like this. This would have been your entry. Your stop loss would have been just above the recent lower high that was created, and your take profit would go where the indication ended. This would have also been a winning trade. Price would have come close to waking you out. But since your stop loss would have been just a little bit above the recent lower high that was created, you wouldn't have been taken out. For everybody on Instagram that was asking me why I did not take this entry, I hope this answers that. And it doesn't mean that since I did not take this entry, this was not a valid entry point. This was a valid entry point. But the only thing that would have saved this trade is your stop loss placement. You would have entered from here, stop loss just a little bit above the recent lower high that was created, take profit where the indication ended, and you would have still hit TP. But I did not enter from here. My entry was around here. My stop loss was just down here because I had already confirmed that price is not trying to go above this zone. So this is where I put my stop loss, and this is where my take profit was. And when it comes to ICC, and something that I need you guys to understand, if we are following market structure and the market is truly trending, let's say the market is trending to the upside or to the downside, whenever the market is trending, it is going to consistently make lower lows and lower highs. And if the market is selling, it's always going to be selling to a level of buyers. So when you mark out your charts, I want you to always mark out your indication and always mark out where the next level of buyers or sellers are. So if the market is trending and it creates a lower low, comes up, creates a lower high, it is going to be looking to create another lower low and continue the trend. And it's going to be selling to a level of buyers. Price is always selling to a level of buyers, and it's always buying to a level of sellers. And once you understand that, that will help you hold your trades and give you a better risk to reward. So as you can see on EURUSD, this was the next level of buyers, and this was another level of buyers. So instead of putting your take profit right here, where the indication ended, you can now put it down here, where we know that this is a low and this is a next level of buyers. That gives you a 1:5 risk to reward compared to the 1:2 risk to reward that you would have gotten previously. This gives you a 1:5, which ends up giving you more profit. Same setup, just a different risk to reward. And all this takes is for you to have patience and hold a little bit longer. Because like I said, if price is buying, price is always going to buy to a level of sellers. And if price is selling, it's always going to sell to a level of buyers. So instead of us putting our take profit right here, we can now put it where we know that price will hit if the trend continues. So currently I am waiting for EURUSD to correct because we have a new indication to the downside and we have a new lower low. So if the market ends up correcting back above this black line and gives me a lower high, comes back below this black line, I will be looking to take sells from here all the way to down here. And that's how my EURUSD trade went. If you found this video useful, please hit the like button, hit the subscribe button. Thank you for watching, and I'll see you in the next one. Peace.